Steelcase ticker SCS is up 30 or just under 30% as we're recording this video. Now, what is a catalyst and what are key levels? So for the quick catalyst, so again, it significantly improved adjusted earnings per share of between 80 and 90 cents. This is well above the 66 cents markets were expecting. So again, massive beat, which is always going to be obviously a good catalyst. And so because of this, again, I do think it will be quite rare that we see a move all the way back down to kind of 880 in the near future. So it is quite a bullish move, but it's not to say that now where we are is justified, because from how I trade, we are now extremely overbought and it's now something I'm short biased at. So what you can see here, these blue lines at 960, these are our second deviations between the 6 month and the 1 year. Then coming into these green lines, these are our third deviations between the 1 year and the 6 month. And then this red line, which is our fourth deviation between the two charts. Now, we don't tend to ever see stocks really trading at their fourth. And when they do, tends to be very short-lived. And again, that's why you're kind of seeing we start to get some consolidation as we come into here. Because again, a lot of people, you probably see quite a lot of more, maybe not institutional buyers, but more longer term traders kind of getting out around these areas just because it's very extreme, super extended. So it just really kind of makes sense to be getting out around an area like this. But again, considering then we have key levels at 960, 1030 and $11, what does this mean when we're above it? So to me, this is a really high probability short buy stock and a short bias opportunity in general. Now, if we go over the trade, we can see firstly it is easy to borrow, does have options. Now, this is great because it means we can play the stock short bias down to the targets of $11, 1030s and the 960s while also being protected. So again, we can short the shares. We're probably not even going to have to pay a fee because again, easy to borrow. So we could be shorting them right now around $11.25, and what we can do is either buy a $10 or $12.50 call. And again, what this will do, these are 30 days out, so we can give it 30 days to play out. And what this will mean is obviously if we buy the $10 call, if it stays above $10, obviously, you're going to kind of take a loss. But again, it's defined to whatever you're paying really for this call. So you're paying say $150 for the call, it's over 120. So you're really only risking about 25 cents per 100 shares that you, $25 per 100 shares that you're shorting. So the risk on that side isn't bad. And then if you're buying the 1250, you're actually taking on quite a lot more risk, because you're also paying for the premium difference. So again, you're going to be paying $125 of risk per 100 shares in the underlying shares, and then $20 in premium. So you'll be taking on a bit more risk to take out that further call, but again, then there's more chance that you can end in the profit. And again, that's why normally you take on, or it's cheaper to buy the premium. But again, I'm probably going to go with the $10 ones because I do think we'll fall quite below that $10 again. We got the first target coming in at around 1030, so that would be first target, but we would expect a breakthrough there, and I'll be targeting kind of around 960. Then I think we would be trading at a bit more of a reasonable level. Again, not really expecting a move all the way back, just because again, this was good earnings. It was very strong, so getting a move all the way back probably isn't likely, but it's definitely seeing a pullback to a more reasonable level like 960 is definitely something I could see happening. So that's more my focus on the stock. We went through the key levels and I went through my trade plan. I hope you enjoyed the video. Hope to see you next one, and that's it. Peace.